Hey, what's going on, everyone? My name is Aaron. Today we're going to talk about the importance of having a long-term outlook when it comes to investing in the stock market and the many benefits that come along with that. If you like that idea, please feel free to like the video and subscribe to the channel, and let's get right into it. Now, it should be noted, there are many ways to make money in the stock market. You can buy options, calls, individual stock, there's leaps, spreads, many different strategies. But a lot of these strategies require you as an investor to either take on additional risk, have additional capital, or have some kind of skill that you might not already possess. Now, when we talk about having a long-term investing mindset, what we're really talking about is implementing a buy and hold investing strategy, right? So buying stocks and plan on holding them for long periods of time. This is a really time-tested, deeply researched method, and it's been proven to have great results. However, in this video, we're gonna be talking specifically about why this long-term buy and hold investing mindset is so important. Okay, so having a long-term stock market outlook is so important because it really aligns you as an investor with the essence of what it means to be investing in a company. Now, people often forget a stock is more than just a symbol on a screen with a price attached to it, right? Behind every stock is a company. There are employees, CEOs, they produce products and services, they're continuously attempting to add value over time to their customers. There are people who are pouring their entire livelihoods, right, into this company. Now, I know this seems obvious, but we tend to forget this fact at the allure of making a quick profit in the markets, especially in these momentum-driven rallies. How often have you heard people say, well, the market only goes up, stocks only go up, it's so easy to make money, right? All these sayings, what it really means is that people are thinking about a stock in terms of its price, not a stock in terms of the company behind it. I think a great example is when you see a stock go from 50 to 80, and people think, well, how much harder could it be for the stock to add an extra 10 bucks, right, for me to make a quick little profit on this one company? And when we're thinking like that, we're not thinking about the essence of a company and the essence of a long-term investing. Again, we're just thinking about a company in terms of its stock price. So instead of having that kind of mindset, we should be thinking in terms of what kind of value is this company going to produce, right? What kind of products or services are they going to create that's going to add a value to their customers, which will then add an extra 10, 20, 30 bucks onto the stock price. Because again, when you have a long-term investing mindset, it's the value that the company is providing to its customers that's going to, in the long term, propel the stock price. So it should be noted, remember, a company can't just 10x the value it provides to its customers overnight. So we similarly shouldn't expect a stock to provide us those crazy outsized gains in a short period of time. 10x's, 5x's, those are all very possible, but they take a long time to happen because the company needs to create those products, create those services, provide that value, and then the stock has to reflect that. So in fact, in the short term, stocks are moved by a variety of random factors that really have nothing to do with the company itself. So for example, in the short term, stocks are largely driven by momentum, they're driven by market sentiment, politics, even a CEO tweets something that could adversely or positively affect the stock price, but it's nothing intrinsic to the company itself. It's always market noise. However, over the long term, over the life of the company, the price of the stock will eventually align with the value that the company is providing. So a great example of this is Tesla. For many years, Tesla stock was the most heavily shorted stock in the entire stock market. And as a result, it kept the price artificially low. Now, Tesla as a company was continuously improving and providing a better and better product, adding more features and providing more value to their customers. But the stock price wasn't being reflective of that. And again, that's just due to the short-term factors that have nothing to do with the company and everything to do with how the market is viewing that stock. But then what we saw is once those short-term factors subsided, the stock price rose exponentially to, in a sense, account for the true value of the company. So a great analogy I like to think about is imagine you're driving from LA to New York. LA to New York, the fastest way to get to LA to New York is a straight line, obviously. But you can't just drive in a straight line from LA to New York, right? The roads take you around, the freeways go up, down, you cut through different states, you zigzag around, but eventually you end up at where you want to go. But it's not a straight line. So that kind of detour, the fact that you're not going in a straight direction, that's very representative of what a stock price will do in the short term. A stock price will not move in the most efficient way that tracks the value of the company. A stock will go up, it'll go down, it's affected by this, it's affected by that. But over the long term, if you have a long-term investing outlook, the stock price will eventually match the value of that company. So I personally like to think of investing as a journey, right? It's the investing journey or a process, right? The process of investing. And the reason I think about this is that the life of a company is a journey or a process, right? A company is not just built and the next day it's a mature big company. It's like a tree, right? The journey of growth starts off very small and then they expand, they add more customers, they add more employees, and over time they become bigger and bigger and bigger and they grow into a fully blossomed mature company. Now remember, this is going to take years and years, if not decades, to play out. But that's why it's even so much more important to have that long-term investing mindset, because this is a process, it's a journey, it's an undertaking. that you're going on when you purchase stock in a company. So a great mindset to have is to think about your investments from the perspective of the CEO of that company. So for example, if you're a CEO, Jeff Bezos puts it best where he says the job of a CEO is to make a few high impact decisions versus like a low end manager who has to make several small impact decisions every day, right? A CEO has to make a few long-term high impact decisions. Now this is an important thing to remember because a CEO is responsible for the long-term big picture development and future of the company. Apple is a great example to use. Apple has product development and product schedules going out 4 or 5 years into the future. So in other words, they're planning out how they're going to add value to their customers 4 or 5 years into the future. Now, this is drastically different from a company that focuses on providing results, let's say for the next 1 quarter or maybe even the next 1 year. Apple, on the other hand, is focusing on providing value several years down the line. Now, again, this is a key thing to understand because if you're investing in Apple, as an investor, you need to understand that the value the company is trying to provide, they're looking several years down the line. So in terms of the reflection of that on the stock price, it's going to take several years, if not more, for that value to be reflected. But again, if we're investing with a long-term outlook for a long-term market approach, a buy and hold strategy, we will eventually reap the rewards of that. Now remember, when you invest in a company, what you're really purchasing is ownership, right? Partial ownership in that company. Nowadays, everything is so electronic and digital that no one receives physical stock certificates anymore. But that's what it is. You are a certified owner, partial owner of a company. That stock is like your ticket. Think of it like a roller coaster ticket, right? And when you buy that stock, you're along for the ride and you're going to be there for the ups and downs of the roller coaster. But over the long term, as long as you have a long-term market outlook, you can rest assured that as long as that company is continuously providing more and more value to its customers over time, you can rest assured that you're going to profit on that investment. Now, before I wrap up this video, I want to touch on just some of the factors that tend to drive the stock market and by and large economies up over time. So in a developed nation, over time, as populations increase and technology develops, each individual in society becomes more and more productive, and the cost of production comes down because of the developments in technology. That tends to result in people's incomes going up, their standard of living increases, and that extra money is then spent on consumeristic products, thus fueling the companies that are providing those products and adding to the economy overall. Once again, though, this is a long-term process that takes many, many years to play out and even decades to develop, which is just another reason why having a long-term market outlook is so important. But being able to have that is going to be crucial for your success in the markets. I want to thank you for sticking to the end of the video. If you liked it, please leave a like and subscribe to the channel. Stick a comment in the comment section down below, and I'll see you in the next one.